The Kenyan stock market has rallied for 2 straight years. That is 2024 and 2025. And this is the first time we have seen the stock market, the Kenya stock market, rally for 2 consecutive years with major gains. But the real question is, will the rally continue, or will we see a dip or even a downtrend in coming years or next year? And if this is so, which companies have the potential to keep delivering in 2026? Today, I'll show you the stocks that combine value, growth, and resilience, and why they are my top picks. I'll discuss 7 stocks. And here we are not speaking about stocks that are just undervalued. Undervaluation is one of the things that I was going for when I was analyzing these stocks. But we are not just looking for undervaluation. We are also looking at for stocks with potential. A disclaimer here. This is not financial advice. I did the analysis just to give you an idea of what to look for when it comes to maybe selecting which stocks to invest in. But please make sure that you do your own analysis to find out which are the best fit for you among the ones that I'm going to be discussing today. Also remember, the stock market is risky and past performance does not guarantee future performance. Personally, I feel like it's a risk worth taking, investing in the stock market and taking this risk because the potential reward is also high. And the reason why I'm doing this video is to show you the opportunities, okay? If you're looking for investment opportunities, make sure that you hit that subscribe button because that is what we talk about in this channel. Now, before we dive into the picks, the top 7 picks, I would like to set the stage because it's very crucial we understand the why, right? I know we have noticed that the stock market has gained a lot of traction this year. Even people speaking about stock market, people moving to investing in the stock market, and a lot of people are speaking about it, yeah? And I want us to look at why now. And to answer this question, I think we have to look at the bigger picture. That is the economic tailwinds making stocks a smart investment at the moment, all right? Now, the CBK, that is the Central Bank of Kenya, controls the economy, or the flow of cash in the economy through, number 1, the interest rates. Right now, the interest rate is at 9%, and lower rates means businesses borrow more affordably to just expand, right? And this boosts profits and also the stock prices. Lower rates means that people are being discouraged to move money to investing in government securities or in treasury bills and bonds, and they start investing in businesses or to look for other investment with better returns, right? And stocks have both of these. You're investing in a business when you invest in the stocks, and number 2, you are getting better returns. So when the interest rates are lowered, they drive people to invest in the stock market. And this is how they fuel or they stimulate the economy, just to make sure there is more money in circulation and it works. Look at us now. We are looking at better investment option rather than investing in the bonds or in money market funds because the rates for money market funds are lower. And that is the reason why they will keep dropping the interest rate to a level that they feel is sufficient, okay? Just to make sure they are stimulating the economy. Now, so long as the interest rates are going down, the stock market will continue doing well. The other thing is the fact that inflation is easing to, right now we are at 4.5%, which signifies stability. It means that prices are stabilizing and they are preserving your purchasing power, and this encourages consumer spending. This also creates a predictable environment where companies usually thrive, and this leads to steadier stock returns. Number 3, we also have sector drivers, and I know you have noticed that there is bank recovery. The banks are rebounding with healthier balance sheets. We also have insurance, which is expanding as more people are seeking protection, including wealth protection. And this is the subject that I want us to look at in 2026, because I believe that this is the next step to building wealth. How do you protect your wealth? We'll be covering that in more details in later videos. It's a subject that has piqued my interest, and I think it's a subject that we need to explore. And then there is also the shift to clean energy, which is opening massive investment avenue in renewable and also in technology industries. These trends signals strong growth potential in the key industries. And with these factors in play, it is a great option to invest in the stock market. Now, I know a few people are worried on how the elections will affect the stock market, and I looked at the past performance of stocks during the election period that we have had, and it's very clear that elections often bring short-term volatility due to uncertainty, and this is very common even in other markets. Political tension usually cause short-term volatility in the stock market, but markets tend to stabilize and recover over time. And the extent of the moment of the market depends on factors like the health of the economy, also investor sentiment, and whether the election's outcome will be peaceful or disruptive. In our past, like in 2007 to 2008, we saw a major dip in the market because of how the elections results turned out. But our main focus today is on undervalued stocks for long-term holdings that can weather the noises and also recover even after the noises in the market. Now, that being said, I would like us to get into my picks. I have categorized them in different sectors. We have 4 stocks in the banking sector, 2 in the manufacturing and energy sector, and then 2 in the insurance sector. I had a longer list of undervalued companies because I believe that the NSE is still very young and most of the stocks that we have in the market are undervalued. But I had to cut it down to stocks that shows value growth and resilience, not just stocks that look cheap on paper but may not actually deliver because the fundamentals or they have governance issues which make the discount meaningless. So I believe these stocks are undervalued and at the same time they show potential for growth and also resilience. So in the banking sector, the first stock is Diamond Trust Bank stocks, and this one is a steal. It is priced super low compared to what it is worth. You could get about 10% back in dividends each year, and the bank is growing its business by around 18% annually. It is a classic value pick. The number 2 bank is I&M Bank, and it's growing fast at about 20% a year with a solid 9% dividend payout. Plus, it operates in multiple countries, meaning regional diversification, okay? Our number 3 stock is BK Group, and this is spreading out across East Africa, which helps it grow around 20%. At number 4, we have Standard Chartered Bank. This is a big bank that is super stable and it pays a high dividend of up to 15%, making it very dependable. And for those who are looking for an investment portfolio, this can work as an anchor for your investment, like a steady income source no matter what happens. And as we go through this list, in as much as these companies are given dividends over a period of time and they have been very consistent, dividends are not guaranteed, and a company decides you cannot predict how much dividend you're going to be getting from a company. You can only know after they declare, all right? So the dividends are not guaranteed, but the fact that these companies are given dividends for over the past 10 years consistently, it's something to go with, right? Now that is it for the banking sector. Now I would like us to look at the manufacturing and energy sector, and under this I have 2 companies. The number 1 company is Seed Investments, and this company produce industrial gases like for welding and also medical use, and it's growing at 19% with a 7% dividend. And it's an overlooked gem, I would say, because not many people notice it, but it's quietly profitable. But I've seen a few people are noticing it now, and I think it's a great pick for us to look into, right? The other pick in the same industry is Kenyan, and I know people have been making noise about this, and I think it's also a great pick. This is a power company that generates electricity, and it pays 10% in dividends and has a reliable demand since everyone needs energy, right? It is defensive, meaning that it can hold up very well even in tough times, okay? The other sector that you're going to look at, or I have companies on, is insurance. And under insurance, I have 2 companies. Number 1 is Jubilee Holding. This is trustworthy one that grows 10 to 15% over time and keep paying dividends regularly, and it's undervalued compared to its peer, and it shows consistent growth. Last but not least, we have Kenya Reinsurance. This is a very careful company with its money. It's a low risk on the books, all right? And the growth is about 10% with a 5% dividend, and it's a conservative one. So it's less likely to surprise you or to show big surprises, all right? So these are my top 7 picks. These are companies that I'm investing in. These are companies that have done some research and found out that are the best to invest in. But I would like to encourage you, just do some research on them, find out whether you agree with me. And the reason why I chose these is because they balance growth, dividends, and also resilience. For example, in a downturn, companies like Kenyan, Seed, and then Jubilee, and also Kenya Re can act as defensive anchors. Then banks like Diamond Trust Kenya, Standard Chartered Bank, I&M, and BK Group may be more cyclical, but their dividends cushion the fall and position you for recovery. And together, they form a portfolio that pays you to wait while still giving you upside. Remember, the market rewards patience, all right? You need to always remember that. And here in this table are a few metrics I use to analyze the funds. If you have a question on what any of this means, please let me know in the comment section and I'll be happy to explain. If you want us to do a video on how to do stock analysis or just to do your due diligence on stocks, you can let me know in the comment section as well. If you're interested in investing in any of these stocks and you don't know where to start, I have a guide for you, a step-by-step guide on what to do until you buy your first stock, as well as the tips for navigating the stock market. The link is in the pinned comment. And again, a disclaimer. This is a list that I analyzed, but you need to do your own research so that you can confirm whether you can invest in these stocks. If you liked the video, give it a thumbs up. If you're looking for a managed fund to invest in the stock market, here is the fund you can consider. And Merry Christmas, and don't forget to invest as you spend. I know December is a spending month, but don't forget to invest as well. You see you in our next video. Happy investing. Bye. Merry Christmas.